Hey traders, how are you? Vladimir here. This is our weekly trading plan and setups. I will not be able to hold the live room tomorrow on Monday, so I'm recording it for you now. Well, for me it's still Sunday, but I guess for some of you, especially when I record it, it's already Monday, so happy week. Monday is our longest session because we prepared the entire week, the entire list of instruments, and during the week we follow up with the updates and the setups as they appear. So that's why Monday session is the longest. So for all those of you who are watching it for the first time, welcome to our family. What I would suggest is this is a trading report which you receive after every single live trading room. Watch this video, it explains how to use this trading report. That's the list of the webinars that it will be very good if you can watch on your own comfort pace. That's the report as it appears. On the very bottom you have the watch list. Okay, so according to that you simply click on any of the instruments you would like. It opens the chart for you explaining what do we expect. Generally it comes from longer time frames, so bigger cycles. That's why during the live rooms and on each report we have here the ideas for the shorter term. So this is in the comment section the deeper explanation, the more detailed. This is for the idea for short term. Okay, this is the idea for short term, and here you have all the list of forex. That's the short term explained in general. Okay, that's the indices, commodities, CFDs, and cryptocurrencies as they appear on the entire list. And the last investment report you can find here as well. So that's basically the trading report. As I just said, Monday would be our longest session, so today this video is longer than the rest. On the rest we mainly talk about setups, how they appear, what do we do, what don't we do, and that's all. During the week you follow it and you trade it with your techniques, management, and your personal approach to trading. So that's all. Let's begin. Now I started before. I would not be able to do it on Monday. Actually, the entire week I'm not around because this is the last week of summer, and I take this week to spend time with my kids and my wife. So that's why I prepared this right now, this video. So you have the entire week plan, and Jordan will follow up in his live rooms. Just follow up for his updates and the reports. Okay, of course I'll be in the groups, in Telegram groups, to assist, answer the questions, direct, mentor, and talk about the setups. But that's all. So let's begin. So we go over the report, all the pairs. We start with the European pairs, the euro dollar, which we were bullish since the previous week. The idea here is very simple. That's the current cycle we have: triple, double, false break, right? Bullish divergence is in place, or our expectations, at least as for now, are bullish. How long will that fit? Maybe it's going to be in a range, or maybe 2 weeks correction, or maybe new high. We don't know at this stage. We do know that the last divergence is bullish from the weekly, and the last cycle on the daily is kind of a big special here, or this one. If this is a special, then that turned to be double. Both are acceptable. Both have the levels. Of course, the first one has the dramatical extension towards the 261.8 right here, and the other one is 61.8. So this is the smaller one, the level of 61.8. We are after the correction, this or other way around, and we expect that to take us towards 38.2 at least. That's why we are. By the way, I'm a bit cold, so if you hear my nose, I'm sorry for that. Just got cold a bit from my son. One of them is sick. So we are after longs yet, so we would like to get retraces and buys. Okay, now what about the short term? Can the short term fit in the idea of the retraces? The answer is yes. We have these 161.8, right, and we have the 61.8 of the second leg, which is basically a very good combination, and that this is why it's also a clearance area, right? It cleans the stop losses around this zone. So I would expect that the euro dollar slowly face the resistance here and start dropping down. In order to be able to trade it on a short term, 4 hour has to fit in with the 1 hour, meaning they both have to make divergences. Currently the 1 hour chart does not have any divergence valid, so it would be good if we have one more push with a divergence, and then we can start looking for sell setups, trendline breakouts, or my favorite style is false breaks and lower lows. So that's for the euro dollar. This is our trading plan. As for now, the euro versus the pound, the pair that we are looking to sell for the long term, we are based on the triple cycle from the weekly, the false breaks with bearish divergence. So we expect 1, 2. In order for that to happen, the daily must fit in with the weekly. Now, since the last divergence on a weekly is bullish, the daily must be corrective cycle. So the daily is currently developing for us this 1, 2. It sits exactly on the 161.8 level, and it develops the divergence for us, right? So far so good, but for that to be triggered, we need the most recent trend line to be broken, or false break and lower lows. As for now, we don't have that happening, so we don't have this situation. Now, previous week we accepted still short-term rallies. Would they fit in trading right now? I wouldn't rush, to be honest, to buy here. It can still make something like that, but I do think that the moves will be limited here. So for all those of you who were buying the previous week, I think that at least as for now, it's much more smarter to cash out and wait to see how it will be developed, rather than trying to be greedy and get more. The way I see that, we should see the slowdown. If we take a look on the crystal ball opportunity, we can observe for special dates, 29 is critical day, right? 29 and 1st. So basically the end, the second part and the end of this week should provide here a possible reversal through the next months, the beginning of the next months. Therefore, I would wait for the bullish run to stop, start creating a false breaks, divergence on a few time frames. Now don't get confused, because it's easy to say, okay, so 4 hour has divergence as well. The answer is no, because these high don't belong to 4 hour chart. These high belong to the daily, right? That's the daily. And the 4 hour is the last rally here. At this stage, it doesn't have any divergence. So that's why I say it could still theoretically go and develop anything like that. But I think it should be pretty much limited. So yes, longs on the short term can still work and can still provide nice opportunity, as there is no divergence, right? But I think it will be limited. So 1-to-1 risk reward, or getting out of the trade as it has divergence against you, that would be my preferred trading plan in such situation. Okay, just see here. Yeah. Okay, so that's for the euro versus the pound. Next one, no, it's my report. Next one on the list, euro versus the yen. Now this pair has no cycles in play. Not in the weekly, because that was the last double cycle, reached the 38.2, game over. That was a double cycle, reached the 38.2, game over. So we don't have cycles. The last divergence on the weekly is bullish. If we don't have cycles, we go with the direction of the divergences. The last divergence on the daily is well, it doesn't have it because it's just the same weekly move, but so it's bullish. It might go and develop here bearish, but it's still early for that, as you can see. Therefore, 4-hour chart has to be corrective cycle. 4-hour chart is one straight leg without any specific cycles in play. Therefore, the idea here is drops and buys. So for the short term, the euro yen can definitely fit into the category of looking for possible sells. So this is the 1-hour chart. If 4-hour is one leg, the 1-hour chart develops here a special cycle, which goes like this. And that means this is the area for possible turnarounds. I don't think it will be for long term. I think that should be short-term fighting zone. It cleared the stop losses of here, right? All the early sellers, those who started to sell here somewhere. It cleared the stop losses. Now it should, on the coming days, make some kind of pullback, which I believe later on would provide the buy opportunity. So euro yen short-term retraces are tradable, longer term are for sales. As per statistics, we don't have any specific days to rely on for top at this stage. That's again supporting the idea that this is short-term before further possible rallies. That's my plan for the euro yen at this stage. Euro versus the Australian. Now this pair is amazing because the weekly is a range and a triple cycle. Therefore, we are for sales. That's the whole idea. Now, in order to be able to trade that, daily must fit in with the weekly. Daily now has double cycle and bearish divergence developing between the two highs. Now, if we take a look closer, the MACD here did not tick down yet, so the divergence is not in play yet. And 4-hour chart must fit in as well. 4-hour chart, though it has a extreme divergence, right? Completely higher high MACD, and the RSI is above 80. This is a very good level and confirmation to start looking for the sells. The way I see that, we should be looking for any double confirmation right now. That could be a false break and lower lows. That could be some kind of bearish hidden divergence and sell off, right? But personally, I would not be surprised if we will still see the pair fighting, making one more high or two more highs around this zone before making the sells. Anyway, the plan here is looking for sell setups. As for now, I would say it's neutral. We have too many warning signs. Why not to long it, for example. Now it's on the waiting list for sells. Meanwhile, neutral. Euro CAD is the next pair. Euro CAD. Yeah, here we go. Now Euro CAD, the long-term sell plan. The long-term is a sell plan for us due to the triple cycle, meaning we are after that. The last divergence on play from the weekly is bullish, therefore daily should be corrective cycle. Daily should be two waves, which as for now it's not, it's just one wave. I suspect that to make a clean above this high right here, start some kind of pullback, one more attempt, and make the move down. And this is how I plan to trade it. Now on 4-hour chart it's building this exactly. 1, 2, 3. This is the place where we would want to get short-term retraces down, which after I suspect we're gonna see a stoppage, rally, and move. So on the short term, we are after possible sells retraces right here. This is the area, clearance zone. This is also 61.8 of this cycle, classical area for short-term sells. In order to fit that in, it's short-term, 4 hour, 1 hour must be together in play. So we would want to see the 1 hour chart creating for us the reversals right here. It could be a false break, for example, false break and lower lows. That could be false break and trendline breakout, right? Any kind of confirmation after the false break, but it must be 4 hour with the 1 hour chart in play, short-term retraces, which after that we will be looking to go and buy. Next European pair on the list is the euro versus the franc. We were bullish on this pair previous week. We still remain bullish on this pair as for the beginning of this week. The idea is bullish divergence from the weekly chart, meaning daily should be corrective cycle. Daily currently is in a rally, no opposite signs, no bearish hidden divergence, no two waves. Therefore, we are still waiting for the bullish correction. If we take a look on these possible measurements of move, range, move, the 61.8 is leading us towards the area closer to 15, 115, where from we can start looking for possible sells. So to do that, we measure this movement closer to 115. We might look for short-term sells. Meanwhile, the pair is still under short-term bullish. Euro New Zealandian is the next European pair. This pair is totally mystery. According to the long-term monthly, we are after two waves, 1, 2, so we are still bullish. According to the shorter view, it's funny to call weekly shorter, right? It looks like a possible triple with bearish divergence is developing. Daily has a bearish divergence by itself with a false break, right, and divergence in play as well. And the 4 hour chart right here does not yet have any divergence, not bearish, right, and not bearish hidden and not bearish ending. So for the euro versus the New Zealandian, for example, once the 4 hour chart would fit with the divergence, we can start looking for the sells. Meanwhile, both directions are tradable for the short term, and I would not be surprised if the euro versus the kiwi even will make one more high. Totally possible. So euro kiwi, I would even say neutral at this moment, but definitely acceptable for both directions to be tradable. The next ones on the pairs are the pounds. Pound versus that dollar. What a mystery of a pair, right? According to the weekly, we are after bullish hidden divergence, bullish cycle in play. We expect a continuation, but, and here comes the but, there are no two candles run on all the move, so just one leg and bullish hidden divergence. Daily must be a cycle by itself, and daily is a cycle by itself. This is a 61.8 cycle right here, and 161.8 of here. So far, so good. We have also not just that, but we also have false breaks, right? Horizontal between the two bottoms. We have divergence on the moving average, right? So the whole idea here is bullish, but we never got any trendline breakout of the pound. We never got any higher highs, so we can't really say the pair is ready for buys, for long-term buys yet. We do have here a convergence principle of the pair, so that's what makes me think we are after buys here every two waves, even if we get a new low. So at the moment we get two waves, we can start looking for the buys. If the pair has 1, 2, that would be a suspicious sign, was very likely to continue further down. And that's what I want to see personally. One more drop, start looking for the buys. Even if it's for new low, it doesn't matter. Now 4 hour has here a bullish hidden divergence, right? but the 1 hour chart does not fit, because the 1 hour chart must confirm this divergence, and it doesn't, which means this is not a corrective cycle. And that's what makes me think it's not ready yet. I prefer to see pound dollar dropping and for buys. So that's for short term, and for long term we still don't have any reversal signs, complete reversal signs. Therefore, what could easily happen here is 1-2 and continuation. So don't rush for the long-term decision with the pound dollar. Okay. Next pound on the pair is the pound versus the franc on the list. Pound versus the franc. I'll make it simple. Weekly is triple double. 1, 2, 3, 1, 2. Bullish hidden divergence as well. Daily is a cycle by itself. Each of the legs from the weekly is a cycle by itself. This is special. This is developing as special. So I want to see the pound franc making a low, another low, and start looking for the buys. Meaning for the short term, pound franc is still sell the rallies. Okay, that's the idea. For long term, new low, buys. The next pair on the list is the pound versus the yen. The weekly has no cycles in play. That was the last double cycle, 38.2 reached, game over. That was a cycle to the upside, game over. So nothing to rely on. However, it starts to look like a triple cycle to the downside, right? 1, 2, 3. In that case, there should be divergence here, right? And there is no divergence, because this is completely low MACD, right here. And from this low also we don't have even on the histogram divergence. So pound versus the yen, I would say bearish, meaning we need start looking for sell setups. The best way to trade that would be, of course, after bearish hidden divergence or 2 waves. Currently we don't have any 2 waves. That's the problem with this pair. It looks like 1 wave on the 4-hour chart. So that could be the case before the sales continue. On the 1-hour chart we do have the special cycle here. It looks like this, right? The divergence is developing. Well, basically it develops on that part, right? So it makes triple as divergence in play. So if we get the lower lows here, we can start trading short-term sell the rallies. But for the long term, I still has the suspicion that this is what we will get before the move down. So I would say the pound yen preferably looking for sell setups. But keep in mind that we might get another attempt with final high. Okay. Next one on the list is the pound versus the Canadian. By the way, pound yen is not on my favorites. Okay, it doesn't have cycles. The divergences are not the best forming, so I would wait for something clearer. Pound versus the Canadian is the next pair on the list. Now for pound CAD, basically the idea is like with the pound Swiss. We got here a double cycle, bullish divergence. Each of the daily cycles, each of the weekly legs is a cycle. So while the first cycle has the divergence, the second one does not have it yet. That's what makes me think pound CAD can still make one more low before it flies. So pound CAD for me is still possible drops. Now the confusion here comes that the 4-hour chart started to bring here the convergence idea. We don't have, however, any 2 waves retrace currently, and that's even not supported by the 1-hour chart at this stage, because we are stuck inside 2 candles, right here. So I would not be surprised if pound CAD is still for the sells. I would be looking still at this stage sell the rallies. For longer term, if we get a new low, we are after buys. or short term at this stage yet. Sell the rally sounds like the correct plan, as the 4-hour chart does not fit in with the daily. The daily does not have any completed divergence. Why would we waste our energies on trying to guess when it stops, right? Pound versus the Aussie, and now this pair is was previous week buy for us. The idea was very simple. We wanted the divergence we got on the 4-hour chart, and on the 1-hour chart we got the setup right here. We will see that in a second. Here is the setup that we were dealing with on the 1-hour chart previous week. We got the two waves, we got the triple bottom with the divergence, we got a breakout, we got the fly. At that point, 1-hour chart became bearish divergence, and the 4-hour chart became divergence by itself right here, right? So that makes it basically getting out. Now what the question is, what's next? So we don't have any clear cycles to rely on too much. Only if that turns to be triple, which we can argue about that, then we can still see the 61.8. However, sorry, the 50, not 61.8, the 50% retrace of the triple. However, the last divergence developing on weekly is bullish. The last divergence developing on daily, right here, is bearish, hidden. So, mixed match. We have nothing for the longer term to rely on right now. So the only way to trade it is the short term. Short term, we need to combine divergences in the same direction. So daily is bearish, 4-hour now is bullish, hidden. Again, doesn't fit, right? So pound Aussie at this stage, totally acceptable for both directions to be tradable on the short term. And the way to trade that is to combine 3 time frames on the same direction. So daily 4-hour not combinable as for now. Daily and weekly also can be combined. So 4-hour and 1-hour, for example, could be combined. So if the 4-hour which starts to be bullish, and the 1-hour makes one more low with valid divergence, that could turn to be a buy. We have a trend line there going, so one more drop to this area could provide this opportunity. So remember, if you want to trade the short term, then make sure that 3 time frames are combined in the same directions. If you are very short term, like 4-hour, 1-hour, then the 15 minutes must be in as well. The next one, the last one, is the pound versus the Kiwi. The pound versus the Kiwi is stuck inside a range, and from my point of view, as long as that's the case and we don't have any bullish divergence, the pressure remains yet bearish. So from my point of view, the pound versus the Kiwi is still acceptable for both directions, however preferable for sells as long as this top holds. Short term trading only inside this range. Okay, so we are done with the pound. The next ones would be the dollar pairs. Dollar versus the yen would be our first one. There are no cycles we can rely on in the dollar yen with weekly and daily, so we are going with the divergences. We have bearish hidden divergence on the weekly. The last divergence on a daily becomes bullish, so that's a confusion, right? And the 4-hour chart also currently has nothing, right? So it has a false break and false break. So what could happen on the dollar yen is simply move inside the range. It can also do triple double before the continuation down, right? But at this stage, both directions are totally tradable. Why? Because weekly and daily don't fit. Again, when they are not fit, we can apply here the short-term trading, and for short-term trading, the conditions here acceptable for both directions, because it could turn to be a range or triple double. We never know. We can't know. So the best way to do that is, again, to combine the last divergences in play. 3 time frames. Any 3 time frames that you combine could be giving you the signal for sell. For me, dollar yen currently, definitely not the best pair to be tradable. Dollar versus the Canadian. Also, the pair has no clear cycles yet. That's what makes me think that we should be focused on buy dips, because there is a good chance we are going higher. The trend line, the broken trend line here, is probably retesting for the next few weeks before the rally. Now on a daily, the last divergence on weekly is bearish as for now. Last divergence on daily as for now is bearish, hidden. Therefore, sell the rallies would be still the valid plan. The last divergence on the 4 hour is bearish, hidden. So sell rallies is still the plan. So bearish, it still is. How far can that go? Now this is a question that we don't really have an answer to, because it can be blocked on the same 100 level that it was before, holding here kind of a double bottom, switching the divergence to bullish in a few days and fly. But the way I see that, the chances for that are, first of all, to get closer to 128, 127, the bigger trend line as well inside the channel, and from there skyrocket. So for me, dollar CAD short term remains bearish. Dollar versus the franc. Now this pair was and remains a mystery from my point of view. On the weekly, we are stuck inside a range, doing basically nothing. False break, doing nothing. So we can't rely on that. Daily currently maintains the bearish pressure after this false break. So basically that's what the daily has for us, right? Kind of a triple cycle with this divergence. So we expect a correction. Correction could be in 2 waves or a range. As for now, both happen. So dollar franc bearish pressure is still there. Sell rallies on the short term. However, for this pair, really all possible. I still think that the best short term currently is sell the rallies. That's for the dollars. Now Pacifics, Aussie versus the dollar. As long as the last bottom holds, the pair is bullish from my point of view. Now I have a little problem with that. We do have false breaks. We never got higher high, we never got trendline breakout. There is no conservative buy setup, only aggressive. Meaning, daily is last divergence is bullish, 4 hour last divergence is bullish, but there is one problem. The 1 hour chart divergence that we got here isn't good, because we don't have 2 candles rule in play. Big X on it. So what we require is better setup. So the last 4 hour chart divergence is bullish, no problem. If we get 2 waves on the 1 hour, we can start looking for the bullish setup. If we get a drop on the 1 hour with a bullish hidden divergence, we can look for buy setup. We need 3 divergences to fit in. If the last divergence on daily is bullish, last divergence on the 4 hour is bullish, once the 1 hour would be valid bullish, that would be a good buy opportunity for us. So look for that to happen. And for me, the bottom line is, as long as this low holds, this is the invalidation area, I would be looking for buys for the Aussie versus the dollar. Aussie versus the franc is the next pair on the list. Let me just find that Aussie franc. Now Aussie franc reached a critical area basically, and the pair has triple cycle here, and this is a double cycle by itself. All the levels are in play, right? This is the first level, 161.8. This is the last duplication, right? This is the 100 level right here. Scary how they fit exactly on the same zone. Divergence, of course, is in play. Also, the last part here is divergence. Therefore, start looking for the possible buys. The last divergence developing on the weekly is also bullish, so we are waiting for 4 hours to fit in and become bullish as well. That could be like this, that could be even one more low for divergence, that could be for higher highs with convergence and then buys. Any setup would be acceptable here. Aussie franc is buy, retraces, even if it goes to one more low. At the moment, that we have 4 hour also fits in a bullish divergence. This is a classical setup. Pay attention to that exactly. 4 hour must fit in as well. Now it has the divergence here, right, on the moving averages, right here, and that's where that's where the idea of buy comes in. So that could be for one more low with divergence. That could be 2 waves breakout with divergence. That could be simply 1 hour chart. Drop, bullish hidden, and buy. Definitely possible scenario as well. That's for the Aussie franc, looking for buys. Aussie versus the Kiwi. We were short on the short term previous week. That was, where is the report? Here. That was the idea of ours. We reached the zone exactly, right below 109. It was simply classical. We got it right here. We got paid beautifully. Now we start looking for the possible buys, which means the best thing would be if we start to get some convergence idea, right? And then we can start looking to buy retraces. The way I see that, most likely we're gonna see that making one more low before the buys, for one reason. Daily, that's the double cycle. Normally they tend to be mirrored, which means that could be the case to clear this area before we continue higher. Now, why we want to go buys right now? Because we are, according to the monthly cycle, we are only after buys. It was a special cycle, which now might turn to be also a range and also 2 waves correction. It doesn't change anything for us because we are after buys. That's where the daily must fit in. Daily could become a bullish hidden divergence. It does right now, right? But it seems too early. Bullish hidden could come also here after it's mirrored. So that's where from we require one of the 2 scenarios, or higher highs. I would say easily 2 waves breakout, but that would be simply too early, because with the breakout there might be bearish hidden divergence, which is a weakness sign. We don't want to buy with divergence against us, right? And that's where the idea of getting one more low, ideally to clean this zone, comes in and make the buys. Keep in mind, it could, as per correction, it can even take us towards 161.8. So there might be still a room further. So short term can still be into the sell. I prefer let the sell happen and wait for the buys. Next one on the list is Aussie versus the Canadian, which has a ranging cycle on the weekly, which has a tunnel on the weekly as well, and on the same time developing bullish divergence on the weekly. Daily chart is a divergence by itself. That was our daily cycle. This is our divergence in play. And 4-hour chart basically also by itself, and 4-hour chart by itself is not supporting the divergence, because we don't have here the 2 candles rule in play. Okay, so what could be here done is just the extreme, and the way I see that, I would prefer to buy here if we get 2 waves. So basically that's what I would be looking to do. 1, 2, bullish divergence, looking for the buys. I wouldn't deal with sell against daily and weekly divergence currently. I would be looking for the buys. However, keep in mind that weekly cycle on the range suggests possible low, meaning once the daily become bearish again, like corrective cycles, that could be 1, 2, right? It can turn to be bearish and sell. And that's the place to say that if this turn to be 1, 2, we switch to sell. Okay? Keep in mind, that's the idea. But at this stage I would prefer to get a low and divergence and buys. It seems currently more reasonable. Of course everything could happen here, but that's the stage. So very tricky pair with many different variations. Definitely not the best to trade, but once we get the combination of 3 divergences in the same direction, we can go and trade. OZN. Now here we have, OZN. Weekly. Bullish. Divergence. Developing. Daily. Bullish. Divergence. Developed. 4 hour. Bullish. False break. Convergence principle. We have here, we are exposed to triple cycle, meaning short-term drops are acceptable. It could be 2 waves, it could be a corrective cycle in a range. We are looking for buys. So short-term drops are acceptable, which after we will be very likely looking for further possible push higher. That's for the OZ versus the yen. Short-term sells, longer term still buy the drops. New Zealandian dollar. The last weekly is double cycle. Last divergence is bullish. Daily on the second leg of the weekly. Daily is a cycle by itself. That could be a special cycle here. That could be a triple cycle here. Or that could be simply double cycle. All variations possible. Now the bottom line is we are after buys. Currently the 4-hour chart developing some kind of divergence. So the way I see that, we are going here. From there some kind of a fight. Very likely we're gonna see here some range and further continuation. As long as we are above the invalidation area, for me it's bullish. Buy retraces. New Zealandian versus the yen. We were bearish there for a long term. Now according to the weekly, we don't have any currently 2 candles rule broken or activated at this stage. Daily has no divergence. Now it's very hidden divergence. So Kiwi yen must be a setup on the 4-hour chart, and this is where it starts to be interesting. That's the place where it starts to be interesting. The levels to watch in that case would be here. Okay, the zone of 74.50 plus. Okay, this is the area where I think Kiwi yen should start the sells. Now keep in mind that the two, let's enlarge here. The 2 candles rule here is very tricky, but the last 2 candles that are really in play here are these 2. And once they are broken, we have it ready. But even if you don't have the 2 candles, once the correction is in 2 waves, it still counts as a topper. Don't forget it. It's each leg is a cycle here by itself, which makes it very good. Kiwi yen, we are looking for sells, ideally from this area. New Zealandian franc, same story. We are basically still bearish. The weekly has no real divergence in play. This is lower lows. Daily has no divergence in play. That's lower lows. So we want sells. So 2 waves or any range, we are looking for sells. Kiwi franc, sell the rallies. And that's all for the forex part, we have two more pairs from the Canadians, CAD versus the yen. We are bearish. The last divergence from the weekly is bearish hidden. Last divergence from the daily is bearish and convergence. So 4-hour chart must fit in, and 4-hour chart develops two waves, so we start to look for the sells. By ideal, of course, we want to see the trend line broken and sell the rallies. And the CAD versus the franc. According to the long term for this pair, we are after buys. We require triple double, so that means the weekly and daily should fit in. Weekly currently is a range, meaning the daily must be cycled by itself on each of the legs. And here comes the mystery, because daily is not a cycle, which we can say, oh wow, right? So that's where the confusion comes from. It can easily make this one more leg, it can easily move inside the range. CAD franc, totally acceptable for both directions. Short-term trading, not my favorite pair at this time of trading. The best way to trade that is to fit any 3 time frames in the same direction and trade it. Last divergence currently available on the daily is bearish, so once the 4-hour chart becomes bearish, it could become a very interesting sell opportunity. If the 1-hour chart would be bearish as well. Meanwhile, it has no combos of 3 time frames. This pair is basically best not to be traded. Gold and silver, the short term remains bullish, which we will be looking to sell. Now, it does look like the daily forms 2 waves with bearish hidden divergence. However, it was the double cycle of this area. It did not cross the 23.6 even. It can still go and reach the 38.2, and the last leg also 38.2 is slightly higher. So I think that gold still has a room to go higher, which we will want to sell. So once we get the 2 waves here confirmed with the divergences, we are going to look for sells. Short term remains bullish, longer term we are looking for sells. Same with silver, 2 waves with bearish divergence, sells. The way it looks, at least as for now, we should get further low before we fly. So short term still bearish. Oil stuck inside the range, meaning both directions are still tradable completely in that in both directions basically. For daily is bullish divergence, 4-hour chart has no bearish divergence, so buy retraces could be still a short-term plan. Both directions, however, are playable and tradable inside this range. And natural gas, we remain bullish, so for us every drop inside the range or 2 waves and we are after buys. Unchanged for us. And sugar, we want to get the commodity making higher highs. It still did not, and if it still did not, it can still make one more low. We're waiting for our setups. Neutral, meanwhile, looking for possible buys. And indices. German DAX, we are bearish on the weekly. Daily, last divergence is bullish, meaning it has to make a correction. So it should become again bearish hidden, or at least corrective cycle on the 4-hour. On the 4-hour, meanwhile, it's 1 leg. So I want to see the 2nd leg before we make the sell. So short term still could provide the rally. Longer term, we're still looking for the sells. Nasdaq seems creating the new high, invalidated the plan for us with breaking this high, never broke the trend line, we never got the sells. Neutral, we are waiting for the setups, nothing to do with that right now. And we have our long-term Italy 40, just find it. Where is Italy? Italy, where are you? You know the rule, whenever you need it, it's not there. No, where is it gone? Let's make it this way maybe. Italy 40. No, it doesn't work. Where my chart gun disappeared finally. Suddenly, not finally. Oh, here we go. Italy, we are bearish in this pair. However, in this index, however, the two waves now completing with bullish divergence. Cash out, and we are waiting for corrective cycle, bearish hidden before we again sells. Cash out. It was a beautiful sell for us, paid beautifully on this ride. Time to make the money, as simple as that. So for longer term we would be still after sales, of course, but as for now, that might be game over, because if that's a special cycle, that could be double cycle. Who knows what's coming here, right? As for now, cashing out, Italy 40 becomes neutral for us. At this stage, we will be looking for the next evidences to trade. Cryptos in a minute. We have our stocks. We have, where is that? The Deutsche Bank, which we are after buys, bullish, right? This is our invalidation. And we have our Facebook short. We are selling, bearish, sell the rallies. And we have the Teva, which we aim where is that? Here. We are aiming 28.29. As for now, any kind of correction are acceptable, but this is our final destination. We cashed out partial 24 a long time ago here. So the next target is still running, remains bullish. As per cryptos, we don't have really anything to get excited about at this stage. Ethereum versus the Bitcoin is the only one that I'm interested in. We have the levels, we have the daily cycles, which are coming from these two combos. What I want to see right now is higher highs and buy retraces. Waiting for the evidence. We want to play aggressive. This would be the high, at least break above that. And we were basically looking for many setups. Litecoin, which the idea was possible continuation lower, it's stuck. So big X from my point of view. Only Ethereum versus the Bitcoin is currently interesting. The rest are waiting for the new conditions. So I'm very bullish for the long term. On the short term, there is nothing to do. As simple as that. So friends, that's all. That's the weekly trading plan we have. Some of the pairs are amazing for us. Some of the pairs require a bit more confirmations. Watch out for those that have the clearer setups currently, those that we want 3 time frames divergence combined, and those who have mix, simply avoid. Okay? Don't find yourself fighting these pairs that have no signs. So as I said at the beginning, I will not be around this week in the live room, so Jordan will hold from here through the week. I will publish the schedule, of course. I wish you wonderful trading, guys. Thank you very much for watching this video. If you have any questions, me, Jordan, and other guys are in the group for you, in the Telegram groups for you, to help you with any questions, doubt, and setup you have in mind. That's all. Thank you for watching. Wonderful trading, Vladimir.